Good evening everyone, Senthil here. Can everyone able to see my screen and hear my voice clearly? Hi Prashant, good evening. Others, can you able to hear my voice clearly? Screen. Thank you Deepak. Thank you Aditya. Good evening Simon, Shyam. So many members are yet to join, let's wait. And today we are going to learn about correlation of cash, future and option. It's a very important session. How to take stop loss, how to keep target. So we may become expert in cash, but we may fail to make some profits in future and options. So all those things we are going to learn today. So Sudarshanu, is the volume is clear now? You have to check your internet connection also. So make sure that before the session you just play your YouTube video and you can see whether the audio is clear. Just before the session you can just do this small checkings every day. So still another 1 week is left, right? So today let's learn the session with the one more technical term called a signal. Okay, so let's wait for a few more minutes. So because if it's a small topic, if I start, many members will not understand that. So let's see. So what else? And recently we have launched a Phoenix referral bot, so you can get more details in public channel, I believe. So I have not gone through that. So once if you could able to refer, you can create a own referral link for your yourself, and if you could able to refer our Stock Phoenix channel to 100 members, you can able to get a chance of getting 1 month free genie. That is, after your subscription you can able to get 1 month of free genie. Okay, so more details is available in today's video. You can check in public channel, and let's see. So let's start the session. So others, let them join. So today what we are going to see is the correlation of cash, future and option. So before knowing that, before entering into the correlation, F&O correlation, we should learn something called as what is signal. So again, coming back to the same criteria for as of now we have learned only delivery, right? Delivery trading. We have not entered into the intraday or intraday trading. We have not entered. So whatever we have taken as a BTST or swing or a delivery trading only. So in delivery trading, we can take a stop loss of 5% for cash market, right? So is the same thing can we able to take in future? This is the same thing can we able to take in future. So this is for cash market, 5% stop loss for cash market. The same thing can we able to take in future. Again back to the same thing. And 5% the same thing in options. So if you compare, the instruments are different. So 5% for cash market it will work. 5% for future it is too much. It is too much in the sense it's too much. It will be a very big loss. And 5% for option is very small. 5% of option is very small. Say for example, if you buy an option of 10 rupees, if you put a stop loss at 9.5, it will just hit immediately. The moment you close the order, the option stop loss will hit. So it is very high, it is very low. The stop loss is very low for option, and for future it is very high. Cash market, this is fine. Same thing, say like for example, we will go with 1.5% in future. Let's take like 1.5% in future, but we cannot able to keep 1.5% in option. So everything has a different style of trading. And the one more thing is like situations. This is the very important factor. This is the very important factor. So situations is the very important factor. So that means the stop loss percentage what you are taking for Nifty will not be applicable to stock, and the stop loss percentage you are taking for L&T will not be applicable for Reliance. And the stop loss points which you are taking for Coal India, you can't implement the same stop loss to some other stock which is like in between for 400, 500 rupees. So for this only, we are going to learn one technical term just for an entry and stop loss. Okay. So this theory will be used linked with somewhere else. As of now, we should understand this because we need to take a minimum stop loss. Stop loss will be derived from daily start study. Okay, so to come out of that only, we are coming to this area, this signal study. Say like for example, in a daily chart, a stock worth of 500 rupees, okay, daily chart is giving 15 point stop loss, 15 point stop loss with a lot size of 1200. Can we take this stop loss? Is it possible? In daily chart, a stock worth of 500, okay, in a daily chart it is giving a stop loss of 15 points, that is which is like 3%, and with a lot size of 1200. So is it possible to do this? Will moving average differs on daily basis? Absolutely, sir. Moving average will be different on daily basis. Our capital will erode. So this is not possible. So for that only we are bringing a small signal system to understand and to reduce the stop loss into minimal stage, particularly in future and option. So now what we have to, before learning what we need is, we have to open a 5 minutes chart, 5 minutes cash chart. Okay, we have to open 5 minutes cash chart. 5 minutes cash chart. Again, I'm repeating, this is not for a trading purpose. You should understand what is signal and what is, how to put a stop loss, how to make an entry. This theory will be clubbed in somewhere in the double moving average. So till then you have to wait, hold your patience. Okay. So let me take Reliance. Okay. So now all charts should be in 5 minutes. Charts to be opened in 5 minutes. Charts in 5 minutes. All chart are in cash market or index spot. Okay, so we should not open future chart. You should not open an option chart. I'm repeating, cash should be in 5 minutes. Cash chart should be in 5 minutes, and all charts are to be learned in spot, that is cash market or index spot. If you are seeing for bank nifty, you should see the spot. If you are seeing for nifty, you should see the spot. If you are seeing for cash market, you should see the cash market or spot. Okay, and 100 simple moving average to be added. 100 simple moving average to be added. So here what you are supposed to add is simple moving average 100. So what is the color of simple moving average? Can someone tell? It's a new indicator we are going to add now, right? We have learned about 50, 100, 50, 200 and 450. Now we are adding 100 moving average, and this is to be kept in pink color. This is to be kept in pink color. So when you see the 5-minute chart pink color itself, we will understand this is going to be used for signal execution. Okay, so pink color to be added. Next, how to arrive signal? Signal in the sense making an entry on particular stock. This will not work continuously. That means, how to say? Just a minute. Say like sell here, buy here, sell here, again sell here, buy here, sell here, buy here. It is not going to work like this. Okay, so this is called a stop and reverse method. Whatever just I am showing you, just a minute. For example, making a short entry here, making a long entry here, making a short entry here, long here, short, long. So this is called as SAR method, stop and reverse. Stop and reverse. Okay. So so this is not going to work. We will do in a different way. In a same 5-minute chart, continuously we are not supposed to trade. Okay, in the same 5-minute chart, continuously we are not supposed to trade. Mayur, just now we have started. We have started. We are going to understand what is signal. This signal will reduce the loss, the loss which is going to happen in future market. We will go with the minimum stop loss. For going with the minimum stop loss, we require this signal concept. Okay. So coming back, what is a buy signal? What is a buy signal? Candle crossing from below to above, cutting the 100 moving average is a buy signal. That means you can see here, candle from below to above, candle crossing from below to above the 100 moving average is a buy signal. So let's take this. Candle crossing from below to above, cutting the moving average line is a buy signal. And we have many parameters for fine tuning. The candle should be in green, and it should be, that is called a signal candle. So is this crossing from below to above? Is it meeting the first condition? You can see here, it is crossing from below to above. Yes or no? Answers quickly. Or we cannot consider this. Yes, we can consider. So this is called as a signal candle. So this is called a signal candle. Okay. So candle crossing from below to above is called as a signal candle. So what I'll do is, this is the first candle. So this will not lie in our trade setup. So I'll take something which is in between. I'll take the previous study which is in between, so that we can learn clearly. So let's not learn with the wrong example. Okay, let me take here. So is this happening here? But opening and closing both were above SMA only, right? Yes, that is the first candle. So forget about that. I'll come to that later. Okay, so can we consider this as a signal candle? The condition is candle crossing from below to above, cutting the moving average line is a buy signal. Next, number 2. Candle color should be in green. Candle color should be in green, and this is called a signal candle. So this is going to be the signal candle. The candle color is in green. So next condition is at least 50% of the candle body, including the wick, should be above the moving average line. For example, if the candle is like this, above small wick, below small wick, at least 50% should be above the moving average line. At least 50% should be above the moving average line. Varsha, it is 5-minute chart. 5-minute chart, 100 moving average. Okay. So I'm reading again. At least 50% of the candle body, including wick, should be above the 100 moving average line. So that is at this place. So is this above 50%? See clearly and tell. I'm telling including wick. Wick can be considered. Which cannot be considered in the sense, if the body is like this. So can we consider this? Can we consider this? No, because upside we are seeing the price rejection. This is called as price rejection, PR, price rejection. So we cannot consider this. So what is, if market is coming like this, what is happening here? It should be closing above moving average. Perfect, Priya Ranjan. It should be closing above moving average. Perfect. So that is the right term. So this candle, if you see, it started from down and got closed above the moving average, and 50% is above the moving average line. Okay, number 1. Next. So if the crossover is not above 50%, then wait for the next green candle to complete. For example, if this candle is this much big, okay, if this candle is this much big, let me take you one more example. Okay, let's take this as a, so do you think this crossover is more than 50%? No, right? we can able to see price rejection on the top. So if the candle is like this, then we can take this as a signal candle. We can consider this as a signal candle. We cannot consider this because it has closed above the moving average, but you can see here it is not a healthy candle. It is not a healthy candle. So we can take this as a signal candle. Clear? So let me come back to the same example. So now we know how to filter the trades, how to select or reject the trades. So just a minute. Next. If the crossover is not above 50%, then wait for next green candle to complete. Avoid entering in market before 9:30 a.m. and 3:15 p.m. That is what I rejected the first candle. There was an example. That is the reason I have rejected that. Avoid entering in the market before 9:30 a.m. and 3:15 a.m. based on this theory, because market opening it may go like this and after that it may completely crash. So avoid this. How to execute, how to buy in this range? Execution, buy above the high of the signal candle. But we are not supposed to buy here. Always remember, when we identify something as signal candle, we are not supposed to buy in that signal candle. So buy above this high. So above this high, where it is happening? So can we buy here? It is happening in the fourth candle. Can we buy here? Technically, see here, if it is this much high, this candle was sometime as a green candle. So is our buy triggered here or not? What happened? Why no answers? Sir, this is with this only theory, you are going to reduce your risk in future. This will be the only theory to reduce your risk in future, or else every trade you have to take 12,000 rupees as a stop loss. If you follow this theory, your stop loss in future will be 3 to 5,000 rupees max. Okay, so I think everyone is understood. So this is the signal candle. So no, forget about price rejection, Bharat. But this candle was like this sometime, right? Then if you are going to buy above this level, the buy is triggered technically, right? So the buy is triggered here, or else you can consider this as a signal candle again, and the buy is again triggered here. Okay, entry closing must be greater than the signal candle, not required. If this is the signal candle, if the high is getting broken, we can make our entry. Sir, candle from bottom, it has to cross the moving average. Number one. Number two, it should close above the moving average. Number two. Number three, it should be a green candle. And if the price is more than 50%, then we can consider as a signal candle. We can consider this as a signal candle, and we have to buy only above the signal candle. It can be 1, 2, 3, 4, 5, 6 candles. It can be, because it's a 5-minute charts, right? So our buy is getting triggered here. Who didn't understand till here? Everyone is clear? Can I get one line of confirmation? Because what percentage chart should come from bottom? Sir, forget about that, sir. Forget about that. I'm confused with the other technical setup. Any chances of reversal even if we go proper signals also? Do you think can we trade without a stop loss? There will be always flop will be there. That is, the failure signals will be there. For that, we are going to learn the stop loss. There is no doubt in that. Do you have any entry? Do you have any doubt on entry till here? For example, if your wick is this much, so will you trade? Trade from support, trade from resistance? Madam, don't get confused. We are just learning something apart from the topic. Don't confuse the trade setup with this. We are learning something called a signal, and that is the only thing. Forget about trade setup, trade from top, bottom. support resistance, forget everything. Ma'am, that I'll teach you, ma'am. Don't worry about that. First, I am asking, have you learned this or not? That is my concern. Yes, right. So entry is very clear. So see, it's a, what we are doing is we are doing a patching work. We are learning separate portions and we are correlating. We are doing a connection between this theory and this theory. So this is done. So let me show you. If your entry is here, okay. So execute the buy above the range of the signal candle. If the range of the signal candle is big, then avoid. If the range of the signal candle is big, then avoid. Yes, correct. You can see here, if your stop loss, if the candle above this is like this much, avoid. This trade is not supposed to be done. Okay, next. Stop loss should be 1% from your entry. So now, when we make our entry here, this place, when we make our entry here, our stop loss will be, now this is the point which you may not understand easily. Equally, we have to draw a line downside. So is this line and this line down, is it equal? Is the proportion equal from the moving average line? Bharat sir, see clearly. Moving average line is 1398 and 1402. That means 4 points. 1398, 1394. Approximately it's equal or not? Sir, very simple I am explaining. If the moving average line is like this and this is the place, if you are making an entry, you should draw one more line like this. Are we clear? If this is your entry point, this will act as your stop loss. Who didn't understand this? If your entry is here, okay, if your entry is here, your stop loss will be here at this place. Till where we have to draw the line? From Bharat, from this place, if the entry is 4 points above, from this place 4 points below, you have to draw a line. You have to take the level, that's all. I'll explain you, sir. I'll explain you. Is this clear? Virtually, we are drawing a line above and below. If our entry is going to happen here, our stop loss will be just below the moving average line. Equal distance, maybe equal distance. Are we clear? From upside entry and downside the same points. Perfect. Okay, Gandharvaraj sir, I'll explain you again. Okay, let me explain you again. I'm going to explain you from starting. Okay. So moving average line, this is what we are learning is a signal theory. Signal theory, number one, from down, the green candle should cut above the 100 moving average line and close above. So just above the signal. So this is called a signal candle, number one. So wherever the signal candle is getting broken, we should make our entry. So our entry is happening here. And I left one more point. From the moving average line, the entry should be less than 1%. From the moving average line, the entry should be less than 1%. Say for example, 1398. So what is 1% in this? 13 points. Can we take us 13 or 14 points? So from 1398 to 1403, is this less than 1%? Yes or no? Is this less than 1%? Everyone understood? Yes, it is less than 1%. So what will be our stop loss, maximum stop loss? So your maximum stop loss can be 1% only. Your maximum stop loss can be 1% only. And To be very clear, if you are making your entry at this place, sorry, if you are making your entry at this place, if you're making your entry at this place, let me delete the thing, okay, and your stop loss will be just opposite to this place. This will become your default stop loss. That means your maximum stop loss can be proportionately. When you see a mirror, what happens? It shows you perfectly, right? When you see a mirror, it shows you perfectly. Same like that, if you are making your entry here, just opposite, you keep your stop loss as a maximum stop loss. This entry and stop loss or entry and this line should not exceed more than 1%. So taking Reliance stop loss of minus 9 points, is this worth? In Reliance future, taking a stop loss, I am telling 1% or technical stop loss. So this is technical stop loss. Technical now, which is lower? As per technical, it is 9%. As per maximum stop loss, it is 14 points. So which we can take, 1 or 2? Perfect. 1, that is 9. So if into 500, so our maximum loss in a Reliance trade will be 4,500 rupees for this situation. For this situation, it will be 4,500 rupees. Same like that, the situations will be keep on changing. So let me read other point. Stop loss should be 1% from your entry and 1% from the line to be considered as an entry level. That means, for example, hold your questions. The exclusions in the sense not which not to do here. So for example, if you are trying to make your entry here, if you are trying to make your entry here, okay, if you are trying to make your entry here, if the candle is this much big, so that means how much? This moving average line is 1400 and your entry is 1411. Can we make our entry here? Yes, we can make our entry because it is less than 1%. Number one, it is less than 1%. Okay, when you make your entry like this, if you are making your entry like this, then don't keep your stop loss here. That is what I told you. Stock market is all about situations, sir. Instances. To be the right term, what is that? Instances. Yesterday instance will not be like today's instant. So when you make your entry here, you have to keep this level as a stop loss. It's less than 1%. The entry is less than 1%. But still, if you feel the candle is very big, you can avoid. But you mentioned in such range, that is what I'm telling, Rekha. If it is like, if you feel like it's a big candle, you can avoid. You should see again a room to travel. From here, if the room to travel is this much, yes, we can take. But if it is only this much, don't enter. Any doubts? So I'll do one thing. I'll show you multiple examples. After that, we can ask your questions. Okay. This is not a proper signal candle. I am not going to ask you questions. I am just going to explain you how do I calculate, how do I execute. Okay. So I am making my execution entry here. The highest triggered signal candle, the highest triggered here, and entry is done. And my default stop loss will be this place. And you can see my default stop loss is hit at this place. Just ask sir to get some perfection. No, I'll explain you. I'll ask questions just after 10 examples. Okay. So this is done. So next is, so do I need to explain you completely for selling? It is just opposite to whatever we have learned. So you can see this is a signal candle, but can we go and sell below this level? How much is the percentage? 1402, 1422. So this is more than 1%, right? This line is more than 1%. So no trade. This complete area, no trade. This complete area, no trade. Don't take, if when you see a crossover candle like this, when you see a crossover candle like this, don't go and trade here, here, here. It will not work because it has already created imbalance. That means somewhere the trade is collapsed. When you see one full spike in commodities, we used to tell spikes. That means candle will go just like this and again come back and settle down here. You can see a doji like this. You can see a doji like this in commodities. Every day evening 7 o'clock or the inventory sessions, you can see a doji like this. So this is called a spike. So this kind of activities which is not happening in equities, so that is we are blessed, we can say. So when you see this kind of candle, this is ignored. This chart, how many minute chart? 5-minute chart, sir. 1% stop loss from the entry 100 MA. That's perfect. Okay. So now I'm going to show you multiple examples. Let me take through. Complete means for the whole day. No, I didn't get you. Bharat. Complete means for the whole day. Complete what? I didn't get. That is a 5 minutes candle. So how can you see 30 days, 5 minutes? So let me take some other chart. Since this stock was completely in uptrend, we could not able to see many signals. Okay, here we have good place to understand. So now see, this is a very good place. So now let's learn exclusions. Okay, let me read the selling also, shorting also. Let me read. If we get a big spike like that, can we do trade for the whole day? Avoid that particular stock. When you get a spike like this, why do you want to get it? When you see a big spike like this, that means the stock is collapsed. The stock is collapsed. Someone has done some big order, someone has done some mistake orders, something has happened in that stock. Why do you want to go and enter there? Will you buy a damaged product? Knowingly, will you buy a damaged product? No, right? So we know that that is a trap. Let's not enter here. So now selling, candle crossing from above to below, candle crossing from above to below, cutting the moving average is a sell signal, and 50% of the candle should be below the moving average line. 50% of the candle should be below the moving average line, and this is the signal candle. And below this, we can go for a short. In the next candle, we can go for a short. At this place, we can go. This place, we can go for a short. And same thing. All those things are same only. Stop loss should be less than 1%. So please read this theory. This is very important. For arriving this theory, I have lost lakhs and lakhs of money. I'm telling very honestly. For arriving this theory, I have lost lakhs and lakhs of money, because you may feel that what is there in this theory? It is just a simple moving average 100 line. But to arrive this scaling for 100, I worked for 3 months. I worked with linear regression, I worked with GAN lines, I worked with EMA, I worked with SMA and weighted moving average. At last, I could able to convince and settle down with here, as it is giving less false signal. Stock, you should check with Prabhu Madhu. Okay, so coming back, so this is signal candle. Is the buy triggered here? Accuracy for this theory, I'll tell you. Still, I am not getting into the theory. Just we are learning what is signal. Sudhindra Bath, how can you say there is a buy signal here? Check again. We need 2 candles to confirm that as a buy signal. There should be one more candle going above this, and that candle also should be in green to make a buy signal. So here the buy signal is not triggered. We should not show our urgency in execution. Okay, so the buy is not triggered. Can we short here? Forget about 4 trade setup. Forget about 4 trade setup. Yes, we can short here. Sir, candle coming from above to below, and it is crossing this moving average line and stop loss is less than 1%, why don't you take a chance? We can trade. Okay, but you cannot able to trade buy here, sell here. That is not going to work. So next, is this a proper sell signal? Answers, please, everyone participate. It's my request. It's a very strong theory, I'll tell you. If you are looking for option to be an expert in option, you cannot avoid this theory. You cannot avoid this theory. This will give you left and right money. So it's a perfect sell signal. So you can see here, do you think this is a proper buy signal? Yes, it's a proper buy signal. So is this a proper sell signal? No. Let us see why no. 2310, 2318. It's a proper sell signal. Okay, it's a proper sell signal uh, because if there is a wick here, then it should have been a red candle here. If there is a big here, then it can be a red candle here. The sell is triggered. It's a proper sell signal. This place we should exit at this place. When you make your entry here, your stop loss got triggered here. Let me see what is the loss. 2310, 2322. But the red signal is not there. Just hold your questions. I'll explain you again. Just by making this chart big, I'll explain you again. Because doing back calculations, we should not compromise ourselves. See here, it's a proper sell signal. Candle is 50% below the moving average line. And if there is a wick, then this candle should have been like this as a sell signal. Am I right? Open is this. Am I right? Low is this. Am I right? So is the sell is triggered now? The moment you enter into the sell signal, market might have immediately reversed. You should not get panic. That is the only thing. If we can manage things, sir, I'll tell you, sir and madam, the important thing in stock market is you should not get collapsed. Confusion is different stage. Okay, confusion is different thing, but collapsing is chronic stage. That means the moment when market goes against you, your hands will start shivering. That is called as collapsing. You should not get into that kind of stage. Okay, yes, market every day anticipate that you are going to face the stop loss. But I am not meaning that every day you have to take a stop loss. No, because stop loss is a part of our life. What stop loss is going to do? It is going to save my capital. You should remember that. Okay, so when you go for a short here, immediately the market reversed and you can exit your positions here. This place you are supposed to make your exit. Your loss is 2310, 2323, 13 points. Do you think it's a big loss in HDFC? Nobody will give you a tip or a technical call with a stop loss of 2750 in stock market in a future trading. Only you can able to arrive. For that, you have to sit and watch, sit and select the stock and trade. Clear? Starting, if the candle is in green, should I make an entry even though if it is a sell trigger? For candle shorting is in green, you should not make your entry. But considering this place opened here and went down first, and after that again came back and closed as a green candle. That is the properties, that is this candle property. So technically in this place sell is triggered. Are we clear, Simon? What should be the exit point? Only trailing stop loss. Yes, if you make your entry here short selling, your stop loss, you can exit at this place. Please respect the stop loss. It is a very small stop loss. Don't try to cheat the stop loss. It will take you big money from you. Gandharvaraj sir, you have to watch this video one more session, because I think I have clearly conveyed all those things. Mayur, why you are not understanding? This is the signal candle. Any doubt? Is this a signal candle? Any doubt? Mayur, answer me quick. Why no, Mayur? It's a signal candle. From this line, it is less than 1%. Then how it will not be a signal candle? The candle has to cross the 50. See, downtrend, it is very clear. Second candle could be of any color. No, second candles could be a red candle. That is what I am explaining in the last 10 minutes. Nobody is understanding. See this candlestick properties. I'll draw this again. So it's a green candle. Okay, it's a green candle in the sense it is a open, right? The moment the candle opened here, it came down and triggered this sell signal. It came down and it triggered this sell signal. After that, again immediately it geared up and closed as a green candle. So technically it was a red candle first, and after that it was a green candle. We have to trade once the low is broken. We have to make our entry. Don't wait for this candle to get closed. This itself is a pakka filtration. Don't wait this candle to get closed. Then the stop loss will be very big. Say, like for example, you take this. We should make our entry here itself. Don't wait to make your entry here. This is not the right place. This is the right place. Are we clear? Okay. So while reading, that is the reason I told you we should understand the candlestick properties clearly. If someone has any doubts, please join this week webinar session, free webinar. Prabhu is going to take only on candlesticks. Open, high, low, open, high, low, and close. So this is open, it made high, it made low, it closed here. So what is this candle? It's a red or green? OHLC is fine. It's a red candle because close is lower than the open. The webinar is Saturday morning 11 o'clock. So opened here, went high till here, came down till here, closed here. Now what is this candle? What type of candle is this? Doji, near doji. Perfect. To be specific, it's a near doji. We can consider as a near doji. It's a red candle and near doji. So we should not forget this OHLC because basics are very important. Okay, basics are very important. So we should always able to correlate. Sir, I'll tell you, I'll tell you, sir. If you practice this within 3 months, 6 months, 1 year, you will see every quarter you will see 100% difference in yourself. You will upgrade yourself every quarterly. You will upgrade yourself 100% if you are following all these parameters whatever we are telling. So say, like, if you are 50% pass out in this complete course curriculum, after the next year you will be like 500% expert on this course curriculum. So there is no doubt in this, because the same theory we have taught to 1500 students and they are making money. Clear? So coming back, so this candle is, this green line is called, sorry, it's not a green line. It's not a green line. Just a minute. It's a pink line. Okay, it's a pink line. Yeah, it's a pink line. So I think we have learned a little bit clearly. So let's see one more time here. Let's see multiple examples. So is the buy triggered here? This is the signal candle. It didn't trigger, so it is not a proper trade. So we are avoiding one false signal here. See here, we are avoiding one false buy signal. So you can see we can go for a selling here. So selling can be executed in this candle only, because coming from top to bottom. Again, you can see we can consider this as a signal candle, and signal is getting triggered here. So once the signal, the entry is happening here, our stop loss is getting triggered here. So again, short is triggered here, it is giving a big profit. But don't do this on stock blindly. This signal theory has to be clubbed with trade setup. I'll teach you later. Now how to put stop loss, for that only we are taking all those things. Okay, so this is rejected. Why? Because you can see this is not a, we are supposed to consider this as a signal candle, but no, it is not above 50%. So this is signal candle. See here, the signal candle high is clearly not broken, just it has touched and continuously it has turned into red. So here it's a signal candle. This is the signal candle and sell is triggered. This is the signal candle, buy is triggered here, and stop loss is getting triggered here, and sell is triggered here again. Madhusudan, from trade setup I decided to go for long, but during entry time 5-minute chart is above 100. Sir, don't do that, sir. That is what I am telling. Correctly you will do the wrong thing. That's what I am telling. Please don't do that. Hold for, see, almost we are in the closure of the class. Please wait with patience, so that I'll teach you the proper trade setup, the proper executions. Okay, so now are we clear with this signal studies? You can, I am going to put this in a website. You can practice this 2 days, 3 days. You take time, you practice this properly. Any doubts in this? Can we move to the next part? Target, no, it is only entry and stop loss. That's all. How to make your entry, how to put your stop loss. Pink line is called what setup? It is a intraday setup, but we cannot able to tell exactly what setup is there. It is just a signal study. The topic is signal. Yeah, you can clarify the doubts tomorrow in the clarification session. Okay, so coming back, signal theory is only for 5 minutes candle. Yes, signal theory is only for 5 minutes candle. Keep this aside, I'll club this with separate study. High chemistry candle, not required. Can be used for day candle, no. This graph is only for cash, not for futures. Because when I enter into the next session, without this you will not understand the next session. So that is the reason I am teaching you this. Keep this separately. Don't club this with your trade setups, or don't take this setup and start trading from tomorrow. You will end up with huge loss. I'll guarantee you now itself. I'll 100% guarantee you now itself. Just blindly, if you take this theory and start trading in Reliance or HDFC or L&T, you will end up with huge loss. But this theory will give you 1:5 risk reward. Okay, this theory, the same theory, if you use it properly, this will give you 1:5 risk reward, and accuracy of this theory is only 60 to 70%. Okay, please don't use this for next 2-3 days till I complete the session. It's my humble request. It is like a basic of the session what I am going to take in the next Monday Tuesday classes. Who didn't understand whatever I told now? Say, like for example, if I tell you before joining this Stock Phoenix course, if I give you a 100-page book and read this and come, then only you are eligible. So in that sense, nobody will come. I will not make business. You will not come and learn. So to avoid all those things, I am teaching something only 1 half-an-hour session. It is supposed to be closed in 15-20 minutes, but we have taken this much time just for this alone. But no issues. If everyone has understood, I am very happy on that. So now let's get into the next part. So now the correlation of cash future option. Okay, the correlation of cash future option. So this is very important. How to make an entry, how to put a stop loss. Okay, how to make an entry, how to put a stop loss. So what is this, what we are going to learn here? So let's see now. So let's see what happened in today's Reliance. It went up today. Let me take some other chart. Okay, so now just a minute. Okay, so now assume that, because I want to show an example what to do comparing uh, comparing the cash future and option. So I am going to take this as an example. Sir, upstocks and Zerodha, it will be very difficult for me to do all this access, whatever I told, right? So it will be very difficult. It will take lot of time. So that the next theories, whatever I am going to take you, I'll try to take in the web version. Web version has its limitations. Okay, so now can we consider this as a buy signal? Somewhere this area as a buy signal? Yes, we will consider just for an example. Actually, it's a proper re-entry. I'll tell you, this is a re-entry point. This is we can clearly tell us it is a re-entry point somewhere here. It's a re-entry point. Okay, so assuming that I am going to make an entry here just for an example, or if you are not convinced this as an entry also, we will just take as a simple example. My entry is at 1335. My stop loss is 1330. Let me take little big itself. Let me take 1330, and I am expecting a target of, so how much is the stop loss? 5 points. I am expecting a target of 10 points. Okay, so 1:2 risk reward, or we can take 15 is 15 has gone, we will take 15 as a target. So now coming to the calculation, how to make an entry in cash and future. How to make an entry in cash related to future. So it should give me little time. So I have to open one more chart. So today was expiry, right? So if you are going to trade in expiry, okay, let's take next month data itself. So now I am taking my entry point. So left side is cash, right side is future, and the other side it's going to be option. So only in cash market we will use this lines. Okay, only in cash market we will use this lines. In future and options we will not be using this. So cash market L&T is the stock, and cash market my entry was, let's assume the time was around 1240 exactly. Okay, 1240 my entry was around 1335. So my stop loss is 1330. My stop loss points is 5 points. and I am closing at 1350. So profit is 15 points. So I am taking, say like 100 shares I am taking. So profit amount is 15 into 100. Any doubts in this? It's an intraday trade. Any doubt in this? The first thing, anyone has any doubts? See this chart. My entry is at 1335. My stop loss is 1330. My target is 1350, and target is hit. So you can take even 10 points. I have taken only 1.25% as a target. Not big also I have not taken. Any doubt in this? Any doubt? No doubt, right? So everyone is very clear. So now when let's see the difference between L&T cash and L&T future. L&T future is 1353. So what is the difference in premium? How much is the difference in premium? 3.5. So approximately 3 rupee 50 paisa. Yes, 3 rupee 40 paisa is the difference. So now either you can calculate the difference and you can make your entry, or say like my entry point is at 1240, sorry, 1240 I am making an entry. 1240 you see the same 1240 you see the future price and make your entry. 1240 you can see here 1240 the future price is 1242. So what is the difference now? 7 points, right? 7 points was difference. There's a difference of 6 to 7 points. 1240 we made our entry here at 1335. At the same time future was at 1342. Okay, we are just, sorry, 1342, sorry, 1342. Thank you. So 1342 we are making our entry. So now what we will keep as a stop loss, sir? Can someone tell, or everyone should tell? Come on. Now how many points I have to keep as a stop loss? Strictly this chart is not used, this future chart is not used to keep to see the charts, just for an entry point. So everyone can give your views, right, wrong. Don't feel about if I can make mistake. No, nothing. Sir, it's not cash trade, Bharat. We are going to trade in future. With the entry of cash market, see the buy is triggered in cash market, but I am going to trade in future. So how much stop loss I have to keep? You can keep 5 points, 10 points, 5% or 13 points. You can give the value, you can tell everything. I want all the members to answer now. Just it will take only 1 minute of time, please. 41 members are there, please respond. So let's see. Okay, I'll not read the names. Okay, just I'll read the results, whatever you have posted. So there is nothing wrong. We are in the learning phase. Whatever is the answer, everything is right. But let's conclude with one answer. Someone has told 1%, 12 points, 5 points, 1%, 5 points, 13 points, 5 points, 1%, 5 points of cash, 5% of cash, 13, 37, 13 points, 12, 13, 37, 1.3. When stop loss in cash, I will exit in future. That's perfect. No doubt in that. It's a perfect answer. It's a perfect understanding. Okay. And 1339, 1337, 1% of future, same 8 points, 1322, 1.3. 1%, 1.5%, 5%, 8 points is equal to 1.5, 1337, 5%, 1%, 1330, no entry. As per my guess, 2 points, 5%, stop loss in cash, difference between cash and future. So now one answer was perfect answer. That is, when stop loss hit in cash, I will exit in future. Okay, that was the perfect 100% matching answer for this question. Number one. Number two, so uh, we can't we can't just leave the stock like okay, let it hit in stop loss in cash, after that I'll make an entry in future, right? So that also we can't leave. So what I'll do is I'll take this same stop loss, whatever the stop loss, 5 points here, I'll take the same stop loss, how to say, this minus 5. So this will be my stop loss. Sorry, stop loss is, so I'll take this as a stop loss. Okay, so I can keep 1337 or 1335 to 37 as a default stop loss I can take, because since it's a future trade, what happens if market puts one line like this? Cash market 100 shares is fine, but if market puts, if you are buying here, if you are assume that you are buying here, it's going like this, and if you are buying here, you are buying here, suddenly if there is one crash like this, can we tolerate? We will get collapsed again. So to avoid this situation, what I do is I take a default stop loss. Default in the sense around this. So in cash market, my stop loss is 5 points, negative 5 points. So what I do is here I'll take in between 1335 to 1337 as a stop loss. That is in between 5 to 7 points. I have to put as a default stop loss. Even if you put 5, that is right. And even if you take 7, that is right. Okay, Bajaj sir. So now before I told you have to take 1% as a stop loss. So now you tell me minus 7 points is a stop loss. Will you take this, or minus 14 points as a stop loss? Will you take this, 1 or 2? Always we will take the minimum risk, right? As per our technicals, the stop loss is only 7 points. So why do we take 14 point stop loss? Not required. So small calculations, when you start doing this, your risk in trades will be drastically reduced, and you can have a healthy trading. In future, taking for 3000 4000 stop loss is digestible, sir. Seriously, I'll tell you. Even if you hit, assume that you are having 2 lakh capital. Okay, this is what is the money management from Stock Phoenix, right? For a future positional, am I right or not? 2 lakh capital is the proper money management as per Stock Phoenix. That is for one lot of future. One lot of future. This is the one. Even if you face back to back minus 4000 rupees into 10 trades, what you are going to face? 40,000 loss. I'll tell you, easily you can recover this in 2 right trades. You can recover this 40,000 rupees in 2 right trades. You can recover this money. Clear? So this is the benefit of this theory. So now, apart from this theory, that is the signal theory, we are correlating. We are correlating. So any doubt now in executing in futures based on cash market? Any doubts? There is nothing. There is nothing to think wrong. That if you can I ask one more doubt? There is no wrong. You have all the rights. You can ask one more. Whatever the doubts you are having, you can ask. Clear? So now, if I am going to buy LNT at 1335, so which option I should take? Call option or put option? So what is the trend? If I am going to look for a buy, so what is the trend in option? Buy, call option. So which call I have to take? Priya Ranjan Mishra, that is what I am telling. This is not a standalone indicator. Okay, this 5-minute signal is not a standalone indicator. Okay, you cannot take simply a chart and simply you cannot able to trade. You will face huge loss. That's what I told you first itself. Please understand the class from starting to end. So we are not taking even 2 hours class. We are closing with 1.5 hours. So please concentrate fully. So now if you are looking for a entry at 1335, we can take call option L&T 1340 call option. Okay, 1340 call option. Oh, it is so costly. This month or last month one? It is very costly. What is the lot size? 375. So now how will I make an entry? No, it's not an ITM entry. When it was 1335, 1340 is a ITM or ATM. When market price is 1335, I take 1340 call. Is it true or false? Is it true or false? No, first you tell me, is it true or false? It is false. How it will be true? It's a false, because 1340 is here, 1340 call is here, current market price is 1345, sorry, 1335. So it has not crossed this level. No, if it is crossing, when it reaches 1341 only, it's true. Now it is false. It's a projection. Even if it is a small duration, small distance, still it's false only. It's a projection. From here, I am sitting at 1335. For example, I am traveling to Chennai, and I am traveling to Chennai. Okay, I am left out with 10 kilometer. So do you think I reached Chennai? No, right? Anything can happen before I reach. So it's a false. So same like that. Uh, Before crossing that price, it is a false. It's only a projection. And this is called as ATM. We can tell as ATM, but that is the perfect right term is first strike. The perfect right term is first strike. If it is at 1340 current market price, and if you are taking 1340 call, it is ATM. At least it should be like 1338, then it's a ATM. So now it's a first strike. So but first strike, it was how will I execute here, sir? Now where to check and make an entry? I know that cash market entry is 1335. So how to make an entry in option? Can someone tell? Same 1240, you see the price. Same 1240, you see the price. 39 rupees. 39 into 375. So is it as per our budget? Is it as per our budget? Can I take a premium of 14,625? No. So now what to do? I should take 1360 call. So again see here, 1240 it is 30 rupees. 1240 it is 30 rupees. So let's see, 30 into 375, 11,250. Yes, it's a I can take this. I can take this as a option. So now what I am making here, my entry is 375 is the lot size, and my entry is at 30 rupees. My entry is 30 rupees. So now approximately I have to keep a stop loss, right? Approximately I have to keep a stop loss. So what can I do? Either I can keep 25% as a stop loss, 25% as a stop loss, but it will be too high. But when you compare this place, the cash itself is, cash or future itself is having only 5 points as a stop loss. Lot size is fixed, we cannot alter. 375 is the lot size and 375 is fixed, so we cannot alter. So first let's see, is it eligible to buy option? Let's see the spread. Forty-four, 44.5. Yes, spread is there. Let's see the liquidity. So all these things are very, very important. So do you think can we go for this liquidity? Is the liquidity is okay? Yes. 5-minute chart. Open a 5-minute chart. Liquidity is fair. I'll not tell it's 100%. 70 to 80% it's fair. So if you want to trade, if you are sure about the trend, we can participate in this, no doubt. Okay. So when you make your entry at 31 rupees, you can take the stop loss of 3 to 4 points. That is 50% of this value you can take as a stop loss. 50% of the cash or future value you can take as a default stop loss. So your stop loss will be 27, that is minus 3 points. So actually the stop loss is minus 7.5. Which should I take? The default stop loss and technical stop loss. So which should I take? Case 1 or 2? Technical stop loss, because this is giving us less stop loss. Okay. So now, yeah, lower risk. If you want to participate, then always be in the side where the stop loss is low. Next. So same like that. End of the day, it is closing at 1350. Let's take us 1350. 1353, it's giving a profit. And options, it is closed at around 44. So now can you see, future profit is 4,000 rupees, option profit is 5,000 rupees. Why, sir? Can someone tell? I'll come, sir. Gandharv, sir, I'll come. Can we use default stop loss for cash and future as an indicator? Cash you can use, you can stop, you cannot use for future. Cash you can use. Whatever is the default stop loss for cash, if the cash stop loss is triggered, you can exit in future and option. Can someone tell why future is giving less profit, option is giving big profit, sir? Can someone tell why? Okay. So there is a mistake. Sorry. Yeah. There is a mistake. I have taken this option 1360. So 34 rupees. So the high is 34. So that's what I saw. But it happens. It will happen. There is no doubt. I'll tell you why. Okay. You can see here. Here the profit in cash market is 1500. Future is 4000 and option is 1500. So this is usual trade. Do you have any doubt here? There is a instance where the profit in option will be more than future trade. I'll show you where. I have a question in this case. Lower stop loss of 3 points. I am not giving markets a fair chance to. No, sir, that's sufficient. That's sufficient because we are not giving a stop loss based on option. We are giving a stop loss based on cash market. Cash market, you can take 100, you can take 5, you can take 50 as per your. No, that's fine, sir. This is sufficient. This is sufficient. This is a fair deal. I'll tell you, this is a fair deal. Let me check whether I have taken right thing in option. Cash market 1330. Sir, if cash market is right, whatever the study I have taken is right only, sir. I am telling this is the beauty of this theory. That is what I am telling. No issues, sir. No issues. This is the beauty of the theory. You will get very limited stop loss in future and also in option. So any doubt? No doubt, right? So correlation we have done, and so let's see what is left out. So same thing, you can do 2 or 3 trades. You can check as your homework. Okay, don't trade in lot size more than 1500 to 2000. So that is for the initial stage. Don't trade in lot size more than 1500 to 2000. Number 1. Number 2, both future and option, check spread, check liquidity. It's a very important factor. And trade in the stock which is daily average true trading range is more than 2%. So don't take a stock which is always sleeping stocks. Just for an example, for a better understanding, sleeping stocks don't take. Take a trending stocks. All your entries in future and options will be on cash triggers. It is very, 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 very important. And time. It will be on cash triggers and time. If cash market buy above 1340 and 1340 is triggered, immediately buy in future. Don't go and see what is the price in future, can we buy or not. Don't do your research by that time. Immediately buy in future. And if your stop loss is hit in cash, immediately exit in future. Even if the stop loss is not hit in future, exit in cash. Okay, exit in future. So stock selection should be done on trade setup only. Okay, so this somewhere I'll come back to you later. This one, okay, this one I'll come back to you later. Now a stop loss and target. Positional, just for entire things I am telling. Positional trade 5%, stop loss as per technical, whichever is lower. So same thing. Future it will be on 1 to 2% or technical, as per technical, whichever is lower. And option position, it can be 25% or premium, whichever is lower. And for cash market, it should be 5% or as per technicals, whichever is lower. Targets, again we have seen yesterday, I think you can go through this. If cash stop loss hit, then how come we will go to buy future? Nanda, I didn't get you. See, after cash buy is getting triggered, you will buy in future, right? Yes or no? If cash market buy is triggered, so okay, you bought in future. If cash market stop loss is triggered, you have to exit in future, that's all. But when we discussed about future class, you told that if any stock is having difference in cash and future, it should be traded in premium. Premium stocks are fine. Discount stocks we should not trade, we should avoid. Cash market is 1340, future is 1345. There is no doubt in trading in this stock. Cash market is 1340 and future is 1338. Still you can trade. Cash market is 1340, future is 1320, then don't trade. Immediately go and see the news. There should be some news in that particular stock. If there is a big difference in negative, then don't trade. You can avoid that stock. Okay, so that's all for the day. So the hedging concepts we'll see tomorrow. So this option writing we have seen already. So any doubts? Yes, Nikhil, I'll share. You can just ping me in the Telegram. I'll just send you in Telegram itself. Nifty, same thing in Nifty also, no doubt. See, don't take Nifty and Bank Nifty. I'll tell you what. See, now your questions will be like, based on this chart, simply can I buy and sell Nifty? Based on this chart, simply can I buy and sell Nifty? Accuracy is only 60%. Please don't try. It is not so good idea. Previously, it was a part of curriculum, but we have removed that since the accuracy is less. Accuracy in the sense, if you trade continuously, it's good. But what happens in some sideways market, we get big losses. You can see here, sell, again buy, sell, again buy. So it's now here. If the future price is more, then I will need to enter. Kindly, which range you can enter? 0.5%. If cash market is 100, future is 100.5, you can make an enter. If it is 101, don't enter. If cash market is 1000, if future price is 1005, up to 1005 you can enter. If it is 1010, you can wait. You can see the previous performance. If there is a premium always, then it's fine, or else try to avoid that particular thing. Clear? So thank you. So we will meet tomorrow with hedging concepts. Please attend the future sessions in live itself. So any chance there are strategies which are having 80 to 90% accuracy? Sir, we will conclude in the end. We will revise everything in the concluding session. We will follow that. No doubt, sir. We can do that. Okay. Thank you.